All right, wings up, wings up, wings up, and welcome to our Wednesday night call, our training call, our G2 Global training call. Guys, I'm so glad to be back on training. You guys know I've been on vacation, and I was just away for a week, and it seemed like I've been away for a long time here. So, but we're back in action. I'm excited about our training for today. Welcome all of you all that's in the room. If you don't mind, just go into the chat room and just get some energy in our room and just shout out wings up just so we can see how many people are in the room and how many people are coming in. We want to welcome them with wings up, which is our G2 global greeting. And so to everyone, just remember when we say wings up to each other, it's a form of encouragement. It's a form of elevation. It's just a mindset and a thinking that we want to make sure that all of us are on the same plane because as we get more and more information, we become more and more powerful, which gives us elevation. So we say wings up as we get ready to prepare to receive some new and innovative information, guys. You guys know that information is the key to success. Information is the key that's going to unlock the doors. A lot of times we get into situations and we make bad financial choices, bad business deals. We make or eliminate ourselves from getting into certain platforms because we don't know how to leverage our credit and we don't know how to build up our business credit. We're so used to utilizing our personal credit on everything that we do. There's a theme that's called being over leveraged. And if you utilize your personal credit for everything, you become personally over leveraged. So the reason why people use business credit and use their business to obtain different things is because the business can sustain more than you can personally. Okay. And not only can it sustain more than you personally, it does not reflect on your personal credit. So you want to be able to leverage. Remember, this is that word leverage again. You want to be able to leverage your business without affecting your personal credit. So today, what we're going to discuss is business credit, how to build it, how to buy it, how to leverage business credit. There's so many different ways that you can build your business credit up. So, how many of you have ever been denied for funding? Some of you all on this call, I know, that's in the investment world. You've been denied, I'm sure, for some type of funding. Though your credit wasn't bad, you had decent credit, but you still got denied for funding. Okay. That's a common issue. That's a common issue. Okay. Anybody in the room that has ever been denied for funding and you know that your credit wasn't that bad? See, most people believe funding is all about credit. It's all about credit scores. It's not. It's not. Funding is not all about credit score. Funding is all about risk. Okay? Funding is not all about credit scores. Funding is all about risk. So, tonight, what I'm going to do is I'm going to show you exactly how the lenders determine risk. Okay. And that's what you need to understand how lenders determine risk. Right. So business credit is not it's not free money. Business credit is your financial reputation. That's what it is. Business credit is a financial reputation. And so the better your reputation, the more money lenders is willing to trust you with. Okay, so just think about it. If you had a loan or someone loaned you $100,000, would you loan it to someone that you've never met? Right? Or would you loan it to someone who's borrowed and repaid money back for 10 years? That's what lenders think like. Okay, this is this. I want you to think about that. So the more history that you have, the more that the lenders can trust your thinking process or your financial process. Okay, so the objective today, what I want to discuss is how to build business credit and get approved for funding, because that's ultimately the goal that each and every one of you all that's on this call is trying to accomplish. How to get approved for funding. I want you to be able to understand how business credit works. I want you to learn how to build a fundable business. Okay. That's another thing that's happening. And I'm noticing that a lot of businesses think that they're doing well, but because of how their business is structured, funding is all about structuring, properly structuring, because lending is all about risk. Okay. So getting your business funded is about having a properly structured business. Right. So you want to learn how to build a fundable business. Okay. You want to understand what these lenders are actually looking for. What are they looking for? How do you qualify for non-personal guaranteed loans? You're going to hear that term in this industry. It's called non-PG. And a lot of people are always asking, hey, can you just use my business credit? What can I get just simply on my business credit, right? Because the personal credit may be challenged. It may be over leveraged. Okay? It may be over leveraged. The thing about businesses is that businesses is not a business won't be over leveraged as much as a personal person can be over leveraged. A personal individual can only sustain and hold so much because of their personal income. But a business, because of its business income, can hold way more. Okay. So you're going to learn how to discover how business credit works. You're going to learn how to build a fundable business. You want to learn and understand what lenders are actually looking for. You want to learn how to qualify for non-personal, guaranteed, non-PG financing. And last but not least, you want to discover the fastest path to obtaining business funding. How do I get the money the fastest? Okay. So this business credit is just one of the most powerful wealth building tools available to entrepreneurs. Us as entrepreneurs utilize this because it allows us and allows a business and allows our businesses to borrow money, obtain lines of credit, finance equipment, purchase inventory, and expand our operations without relying solely on our own personal credit. And this is what you want to get away from. You want to get away from relying solely on your personal credit, because when your business is built correctly, business credit becomes a financial asset that can increase the value of your company and create access to hundreds and thousands and even millions of dollars in capital, because a business can sustain more than you can personally. Okay, so let's get into the nitty gritty here. We're going to learn how this business credit thing really works. Okay, how it actually works. Now, business credit simply is connected to your EIN rather than your social security number. Your EIN number acts as if as your business social security number. So just like you have a 9-digit social security number, you have a 9-digit EIN number. Okay. So business credit agencies collect payment histories from vendors, suppliers, lenders, and financial institutions. Okay. So with business credit, the way that works is they'll reach out to the companies that you've done business with to get a pay history or pay history report from those companies. They'll verify whether those companies that you claim that you've done business with is a legitimate company. They've been around. They can see the stability of their company as well. And this is how you get your business credit to report, because once they report it, then the credit bureaus or the business credit bureaus then put it out towards the Dons of Bradstreet, the SBFE, Equifax Business, things of that nature. Okay, so you want to make sure that that information is being reported to the three major credit bureaus, which is, once again, Dun and Bradstreet. You'll hear them refer to it as DNB. So you'll hear people say, hey, you have your DNB number, or you have a DNB account set up. You want to make sure those credit ranges are anywhere from 80 on up. Okay, so the range is 1 to 100, but anything 80 plus is considered excellent credit. All right. So when creditors look at your business credit, they're looking for what's called a paydex score. They want to see what your paydex score is. So they don't call it credit score in business. They want to call it, what's your paydex score? Okay. What's your paydex score? That paydex score needs to be 80 and better. Okay. All right. Experian Business is another reporting agency. You have three reporting agencies. Experian Business is another. Okay. IntelliScores ranges from 1 to 100. Once again, the 80 plus is your high ranking scores that you want to be hovering around in. Okay. So it's going to measure your payment history. It's going to look at your business age. It's going to review any type of public record. So those are the things that you want to make sure that you have cleared up. So you want to make sure that your reviews and your public records are good, because that's going to affect your score if you have bad reviews. You want a business that has age, because it's going to affect your scores with experience. Okay, because the business is young. The younger the business, the lower the score. This is why people buy Ace corporations and Chef Corps, things of that nature, so they can bypass issues such as that. Okay, same thing with Equifax. They're gonna measure your payment history, credit utilization, your debt obligations, and the company's background. These are the measuring markers that these different companies look at. And so in business credit, you want to know this. You want to know who's looking at what, who's measuring what. Because at the end of the day, remember, you are trying to get funded. Okay? So when you understand, we talk about this all the time, understanding the recipe. This is the recipe. Okay? You're learning how to cook. You're learning how to make a financial pie. All right, that you can eat from. And these are all the tools and the ingredients that you need to put it together. All right, so these three business credit agencies, Dun and Bradstreet, Experian, and Equifax, are your three major agencies that's going to report for you. Okay, so unlike personal credit, business credit has no universal scoring model. Each lender creates its own approval formula. Okay, so many people think that business credit starts when they form an LLC. That's false. That's false. Business credit does not start simply because you formed an LLC. An LLC does not create business credit. An EIN number does not create business credit. Business credit starts only when a lender begins reporting payment history. That's it. Okay? That's it. So just because you have an LLC, just because you have an EIN, that does not establish your business credit. Okay? Business credit only reports when the lender starts, it only begins when the lenders start reporting your payment history. Okay? So, anybody in here, if you heard of a paydex score, if you know about paydex scores, just put in the chat. Yes, I know about it. Okay, we've heard of it. Just put in the chat that you've heard about paydex scores. If you have not and you don't know about paydex scores, this is where you're going to learn that you want to make sure in your business that you have set up, you want to get your paydex score to 80 and above. You want an 80 and above excellent paydex score. Okay? Why do you want an 80 and above excellent paydex score? Because when you start talking about and discussing funding, okay, lenders, once again, they are very particular on their risk measurements because lending is about risk. It's not about credit scores. So this system that the credit bureau set up gives them their risk measurements on how should they loan to you. So as you being a borrower or you being the one that's advising the borrower, you want to make sure that they are meeting these requirements so their risk levels will go down. We want to get them or get you in the higher echelon of eligibility. Okay. So building business credit the right way, what you want to do, number one, okay, lenders first verify your company before they ever review your credit. Most of the time, you're getting denied because your company is not set up properly. I'm going to say that again. Most of the time, your business is getting denied. It's not because of business credit, not because of your credit score. It's simply out the gate. And I'm telling you from a lending standpoint, is that your company is not set up properly. You want to make sure that your LLC or your corporation, number one, is set up properly. You want to make sure that you obtain the EIN from the IRS. Once you do that, you want to make sure that you go and establish your business bank account. You then want to make sure that you have a professional website and business email and dedicated phone number. Lenders look for that. One of the worst things, and I said this on one of our calls, I think a couple of years ago, I look in the room, I see Eva's on our call. I believe she was on that call when we discussed, and Kaya, I believe you guys was on that call when we discussed how people lose or get denied for funding, and they don't believe this because they're sending out a Gmail account, email. So if you are a legitimate business, and think about it from a lender standpoint, and you're making all of this money, why haven't you taken the time to set up a professional email account and website? You're a lender. You're saying that you have funding, and I'm emailing a Gmail account and not an email that's directly toward your business with your business domain. Those are things that not only lenders look at, but future clients even look at. So you want to make sure that you have everything set up right. You want to make sure you have that professional website, that email, that dedicated business line phone number, not just your cell phone number. You have different agencies that you can set up a phone number with. I like to use Grasshopper. Grasshopper is a good one. Use Grasshopper. You want to make sure that you have a 411 directory listing. A business address. I just told someone this the other day. A business address, not a P.O. box number. You want a business address. The best way that I think to do is to get a shared office space address. So, as a lender, when we look up that address to see your business and we see a nice, beautiful office building, oh, okay, this is where he's located. Opposed to you send an address and it gives us back a P.O. box number, okay, or it gives us a home and then it lets us look at your home. We look at, we look at all of that stuff. We've done that in the past, okay. I've been in lending now for over 27 years. I'm telling you, this is what happens. They'll throw your application away looking at the property that you're in. Like, man, it's just crappy. They'll do things like that. I've seen it. But yet you're saying that you make, $100,000 a month, and you gave me an address to a crappy property that looks like, you guys understand what I'm saying? So you want to make sure that your imagery is right as it relates to your business. Okay. You want to make sure that your business, is registered with the state. Any business license that you need, you want to make sure that you have that. So that's your outline. Make your business fundable because the way the underwriters tick, underwriters have a checkbox just like this. And all they do is go down the box and check it off. Okay? They go down the line, like literally, and check it off. They have a checkbox. And that's how they underwrite you. So when the checkbox looks like this, you want to make sure, just like you see those check boxes on the side, that your underwriter is able to check those things off. You're trying to get funded. Why does this matter? If your business cannot be verified, lenders automatically will decline the application before checking your credit. So before we even get to the credit part, the lender will deny you before you would get to the credit part. Okay? You cannot build the roof before building the foundation. The foundation is called fundability. Fundability is more important than credit scores. This is why lenders will lend to someone with a low credit score, but a solid business structure before they'll lend to someone with a high credit score and a weak business structure. So having an entity, a business set up properly, and it being fundable is more important than the credit scores. Okay? So you have to have a fundability checklist. You have to have that fundability checklist when you're building your own company. Okay? Do I have my EIN? Do I have the bank account? Do I have a professional website? Do I have professional email? Do I have the dedicated business phone number? Am I listed with 401 directory? Do I have a real business address that they can look up in Google? Is my business registered with the state? Do I have any licensing requirements? Do I have all the licenses that's needed? Many lenders never even look at your credit. The computer will decline this file before underwriting. So remember, all of this is automated initially before anyone lays eyes on it. So the last thing that you want to do is have your file decline before it gets to the next stage. So this is the first step. You want fundability. You want a business that's fundable. Okay? Secondly, you want to be able to start building your business credit. Okay. You want to start building your business credit. Now, this is probably one of the hardest things with people because they don't know where to go, especially in business. So this is why you're here today. All right. You want to start your business credit. And your business credit begins with vendors. Vendors like Uline, Granger, Summer Office Supplies, Quill. I know you guys know these companies. Crown Office Supplies, Nav, Office Gardener. These are places that you can go with your startup and get business credit established. So all of you all that have businesses right now, go and get you some business credit from some of these vendors. Go online. And Lisa, if you don't mind, Lisa, give them a handout. Make sure that everyone has a handout of this so they can have a copy. Okay. And you guys go online and set up a relationship with all of these vendors. So now these vendors report payments actively to business credit bureaus. All right. So always pay the vendors account early. Early payments increase paydex scores. This is not like your regular personal credit. Okay. When you pay it early, it doesn't do anything for your score. But in business, when you make early payments, it actually shoots up your paydex scores. Okay. So once the vendor accounts report, that's when you want to start moving into those credit cards, fuel cards. You want to get those gas cards, store cards, equipment financing. For those that need fleet financing, okay? Then you're going to graduate into business lines of credit, working capital, SBA, all right? So here's what people do now. That's building it the traditional way. Building it traditional way. You can also build it a quick way by buying business credit. You can buy business credit. So everything that I'm showing you how to build, you can buy it. A lot of times people don't have the money to do it, but you can buy this. Okay, you can come right to G2 Global Network and get business credit if you need it. Business credit typically costs about 4.6% of whatever the face value that you want to show. But you can bypass this and you can actually buy business credit. All right. But if you don't have the money, here's what you have to do. You have to go and build it the traditional way. Start going with some of these smaller accounts, the Ulines, the Grangers, things like that. Okay. And then you will start moving into some of the business credit cards. And after a while, you get some lines of credit, things like that. Okay. So building it this way, you're probably looking at about a 12 to, I don't know, maybe 12 to 16 month build up before you get anything substantial. Okay. So business credit can be also destroyed, or business funding can also be destroyed, just like personal credit. Okay. Just like personal credit. This is probably one of the most important slides that I want you to see tonight. All right. Because lenders don't ask, can they pay? In business credit, lenders don't ask the question, can they pay? They ask, what is the probability they will pay? And things like too many inquiries, multiple inquiries, signals depression to them. Okay. New business account, new business bank account. Most lenders want you to have 6 to 12 months banking history. Okay. So they're going to be asking for 6 to 12 months of bank statements, things of that nature. All right. So you want to keep that in mind. You want to keep that in mind. When you're opening up your business, typically lenders want to see that you have at least 6 months of bank history. They're giving you time to start getting things settled, making a little money. This is still a startup business. But they're going to want to know that you have 6 to 12 months of banking history. Okay. They're looking for, as it relates to your revenue, many lenders require that you make a minimum of, you have a minimum of $10,000 to $20,000 in monthly deposits. Remember, this is still the recipe. Okay. Understand, this is the formula, right? So 10 to 20,000 in monthly deposits is that number that you need to keep in your head. You see why this information is so important? You're learning right now how to get approved for whatever it is that you want. This is the recipe. This is the recipe. So these are some of the biggest mistakes that happens to individuals that kills their deals. Poor cash flow, high existing debt. Okay. Mixing your personal and business funds. So, business, another thing. Underwriters, when they look at your bank statements, they look at your transactions. If they see transactions such as, okay, Quill, okay, trade show, okay, Microsoft payment, okay, payroll. What is this? Macy's? McDonald's? Disney World? You see? I'm a lender. I'm looking at your bank statement and I'm saying in my head, they're mixing up their finances. Disney World has nothing to do with this business. McDonald's has nothing to do with this business. A lot of mistakes that people make, and I see, and I've done it. I did it for years. I don't do it anymore, but I did it for years. I would use my business card. I would pay for gas. I would pay for McDonald's, things for the kids, things like that. And then when you try to go take this to the bank, they're looking at all of these things and saying, hey, is this a business account that's being used for personal expenses? So mixing personal and business funds will kill your deal. Applying too early. Many businesses apply before becoming fundable. Preparation increases your approval odds. So this is why when you come into these trainings and you're learning the recipe, you're learning everything that you need to have in place, what they're going to look for to get approved. You have to have your own checklist. It's simple. You have to have your own checklist. Just like the underwriters have their checklist, you have to have your checklist. Did I meet these requirements? Because I now know the requirements. Once you can check all of your boxes off, you're fundable. They're looking for fundability, right? So lenders evaluate your business credit by what? The business age, the revenue, right? The average monthly deposits. And it's another one I want to add to this. I should have put on here. But the number of monthly deposits. That was another thing that I've learned also in lending that underwriters will decline you. You may make a lot of money, and it makes sense to me after a while. You may make $100,000 a month, but if that 100,000 is coming from one client or two clients, you're still high risk. You're still high risk. Lenders want to see you have a minimum of 4 to 5 deposits coming in. So where we look at what we're putting in and the average deposit that we are making, which is good, lenders are also looking at the number of deposits that you're making. Because if you're averaging your income on 1 to 2 customers that's giving you all this income, if anything happens to those 1 or 2 clients, you're done. So lenders want to see more deposits from more areas than one. They want to see that number. They want high average monthly deposits in terms of monetary, but they want to see high numbers of deposits. The higher number of actual deposits going in, they love that. Low deposit amounts, or not amounts, but frequency, they hate that. Lenders hate that. Okay. So they're going to review your business credit score, your cash flow, your existing debt. Time in business, business bank statements, your public records, your business address. Remember, that's important. Be particular and be intentional about your business address. What do you want them to see if they Google your business address? They want to see your ownership structure. That's another thing I want to talk about. As you attempt to try to get funding, the ownership structure is extremely, extremely important based on what it is that you're trying to accomplish. If you're trying to get funding, the person with the highest credit score, if you have multiple members on your LLC, the person with the highest credit score needs to have at least 80% of the of ownership. Even if it's for the sake of funding, give them 80%. If your credit score is in the trash and then you have a partner who's got great credit score, you don't want to do a 50-50 thing. You don't want to have a 50-50 structure. Why? Because the lender is going to look at both of you. You want the lender not to look at you if your credit is not up to par. So the way that you get around that is that you've got to give your partner at least 80% ownership on paper. Once you're done with funding, then you can go back to your structure. But the lender is going to look at that. You do that in the form of an operating agreement, right? They're going to look at that, what that structure is, because you want them to take that credit and not look at yours. Another thing is experience that comes with the ownership structure. Whatever type of business that you're in, the ownership structure, the person that has the strongest experience and is the leader, right, needs to lead the way, needs to have the most shares or ownership when it comes to funding, because they want to take that experience and see who's going to be running the ship, especially if you don't want them to look at you. Now, if you have equal experience, you have equal credit, then yeah, go 50-50. But if that's not your story, you've got to structure it properly. So what I'm showing you is how to structure it properly. They're going to review your website. They're going to make sure that you have they're going to look at, do you have a professional email? You may think that this is minuscule. You may think that this don't affect you. It's no big deal. But it does. Any tax liens, any UCC filings, judgments, they're going to look for those things. Okay? So lenders are going to want to know, can this business comfortably repay this loan? And the answers come from the entire profile, not just from a credit score. All right. So when you're building your profile, here's all the things right here that you want to make sure that you have intact. It's just your checkbox. It's the checkbox. That's it. Okay. They're going to review that business credit. They're going to review that cash flow, the bank statements, the revenue. They're going to look at all of those things. You can't get around it. So you want to make sure that all of your boxes are checked off. You have to have a checkbox. So getting funding, utilizing business credit. Okay. The best way to get funding, utilizing business credit. Now, there's a process. We talked about building up the profile strategically, organically, which is going to those local vendors, getting those starter accounts, building some age, 5 to 6 months, building some age with those starter accounts. Okay. And from there, you want to start getting business credit cards. You want to give it at least 5 to 6 months. I would give it 6 months with those vendor accounts and then go and apply for business credit cards. Once you get some business credit cards and you give it another 6 months, now you got 12 months of total credit history. You then apply for business lines of credit. Okay. Then you're able to get equipment financing if you need it, large commercial loans if you need it. But once you do those first 3 steps, you're looking at about 100 and let me see. I would say 12 months. I would say maybe about 14 months or so of just building totally before you could get a line of credit. Or you can buy business credit. You know what I mean? So you can buy the business credit. You can buy exactly what I'm giving you. People do that all the time. Okay. So once again, be careful out there. Most of the people out there are scamming, trying to get your money, things of that nature. Be careful when you hear people saying that they can get you business credit. Some people can, some people are just bluffing, but no, we can get you business credit for sure. Okay. So can help you there. So non-personal guarantee, that's what's called non-PG funding. Some lenders offer financing without a personal guarantee once a business demonstrate the following. They demonstrate strong business credit. They demonstrate significant annual revenues. They demonstrate established time in business. They demonstrate strong bank deposits and low business debt. Okay, so they do what's called a debt schedule. All right, they make you fill out what's called a debt schedule. All right, this is how you get non-PG funding, where they don't look at your personal credit at all, just solely on the business. You got to have strong business credit, significant annual revenue, established time in business, which is typically more than 4 years, strong bank deposits, and low business debt. So examples of financing that may be available without a PG depends on qualification, which includes things like corporate fleet cards. You won't need a PG for that. Certain vendors and supplier credit accounts, what we went over earlier, you won't need a PG for that. Some equipment leasing programs. Some of you all need equipment leasing, A lot of times we don't ask for a PG on that. Some fintech banks, fintech business credit products. That's financial technology banks. Okay, that's online type lenders. All right, so you definitely want to make sure that you have your things together when you're going through fintech banks because all of that is pretty much automated. And the computer finds one thing, they'll ditch it. They'll just ditch your file. Okay. So certain commercial lines of credit for established companies. Those are the things that you'll be able to do without a PG. All right. So you just got to get to that place. You just need strong business credit, strong financials, strong deposits. You need to get to that place in order to find a non-PG. If you don't have those things, they're going to automatically make you PG to file. Okay. They're going to make you PG to file, which takes you back to you having strong credit personally. Okay. You want to make sure that you have strong credit personally so you don't have to fall into that category. Okay. So when you're preparing your clients or even yourself, once again, you just simply want to have your checklist. This is it right here. This is it. This is your checklist. Okay. This is your checklist. We're going to give you a copy of this just so you can have. This is your checklist. Business properly registered. EIN is established. Business bank account is active. Revenue is verified. Business credit reporting. No major tax liens. Okay. Do your business need a license? Yes. Do you have it? Yes. Check it off. Your business need a professional website? Yes. Do you have it? Check it off. Do you have a business professional email? Yes. Check it off. Do you have a business phone number? Yes. Check it off. Business address? Yes. Check it off. Clean bank statements? Yes. Check it off. Consistent deposit? Yes. Check it off. Or no, don't check it off. If you don't have consistent deposits, don't check that box yet. Okay. So then you get to look at your profile and say, this is what I'm missing. This is what I'm missing. Okay. So business credit is built. It's not bought overnight. Okay. It's built. So successful funding comes from combining strong business foundations, strong business credit, healthy cash flow, responsible banking, proper funding strategies. When these pieces work together, business positions themselves for long-term financial success. Okay. So how are we able to uh, sell you business credits? It's simple. You have businesses that will lease out. Basically, they'll lease out their business to you to verify on your behalf. Okay, and you just have to pay them because that's all the lenders want to know. Hey, have you ever done any business with this company? And if you don't want to wait 14 months, then this particular company says, hey, I'll verify for them. Okay, but you're going to pay me X amount of dollars to verify. And that's what they do. And now you have business credit in less than 30 days instead of waiting 14, 15 months. And once you have that, you're checking off the box that shows that you have a strong business foundation. You've got strong business credit. Okay. Those are the boxes that you're going to check off. Because those are the areas where you get stuck the most. Okay. So building business credit outside, unlike personal credit, can hold so much more as it relates to funding. As it relates to funding, you can buy your property. I got my current house right now that I'm in currently under my business. My first home I had under my personal. This home I have is under my business. Okay. So another thing when it comes to buying properties, when people are trying to see who owns assets and things of that nature, if it's not in your name and it's under the business, once again, it's shielding you from lawsuits, things of that nature. Okay, it's protecting your assets. All right, you have more protection under the business that you would have under your personal. Okay, different write-offs with the property being under your business. Because the property is under my business, I get to use my property as corporate housing. This is corporate housing that's housing the CEO of G2 Global Network. That's a full write-off, right? Because I'm using, well, not a full write-off, but it's a pretty big write-off. I can deduct a lot of that because this house is being provided to my family for the use of shelter for the CEO of G2 Global Network. This is corporate housing. Okay. So you need to start thinking like that as well when you're setting up your properties. Now, the downside to it is I'm not going to get the best rate like someone that would go to a traditional bank and get lower interest rates and things of that nature because I'm doing a business loan. I'm doing commercial. This is a business loan. It's an investor's loan. But I'm willing to go that route because of the flexibility. I'm willing to go that route because I don't have to go through as much red tape when getting properties under the business. There's less restrictions than it is under the personal. I don't even think I showed I don't even think I showed my taxes. I didn't have to prove taxes or anything like that because it was under the business. I'm just able to show my bank statements. So things like that. So when you learn about these different ways to facilitate and leveraging your knowledge and information, you just learned tonight how to get business funding with structuring your business properly. Okay. Once you get all of this information and you know how to go and increase your scores, maybe you didn't know that you could buy the credit. You may didn't know that. Yes, you can. You can buy it. Okay. Or if you don't have the capital, because it is expensive to do it, but if you don't have the capital, you know how to go out and do it organically. Either one. Okay. You can do it organically. All right. What questions do you all have? Let's see. Some people have some questions in the group. Any questions? Any questions? Here at
I
office.
have a question.
All
Oh,
right,
I'm
shoot.
sorry. Go ahead.
That's okay. Go ahead.
No, it's outside of the what you're communicating on. But do we have an update on the website by chance?
Yes, we have that actually today. I believe they said we should be going live on our first half of the site today or tomorrow. So we're almost there. Everybody should receive their emails and things on next week. But what questions do you all have about the training right now on this particular thing, if you don't mind?
I don't have a question. I just feel it was excellent and very informative.
All right. Excellent. Thank you. Thank you.
And
Thank you.
it, in reference to business credit, with the paydex score of 80 or higher, you
Mhm.
said that you could purchase your business credit. Can you again go over how that process is done for purchasing business credit instead of
Yeah.
aging?
You can buy backdated age credit. We do have businesses and companies that will verify and vouch, and you can have that credit reported to your credit history. Just basically, you have to let us know what your budget is, and it's 4.6% of the face value. You want them to show $100,000 relationship with you. You've got to pay $4,600 to do that. Okay, so but it'll be backdated. It'll give you the history and the 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 fundability reputation that you need for the lender. So people do it that way. People that have the capital, they've been doing it that way for years. A lot of people just don't have that type of cash because, a lot of times when people are dropping cash on us to do it, they're dropping $20,000, things like that, because they've got to get multiple lines of credit added to their business. And they don't want to wait 14, 15 months. They want it done in the next 2 weeks.
Okay. So
Okay.
the amount of business credit a person is looking for should always represent what they are going to be utilizing it for, or what is I mean, like I could say I want $500,000 worth of business credit, but I
Mm-hmm.
have to have a purpose or a utilization for that amount of business credit before I request that, or I mean, how do you determine how much business credit you actually
How
want?
much?
Or
Well,
actually,
it's going to be based on how much you're trying to get. What are you trying to
okay,
borrow?
okay,
If you want to
okay,
borrow 200,000 off your business, you need to be showing that you've had 200,000 or more in business credit prior to.
okay, okay. So if I'm purchasing business credit, then I would need to have at least 10,000 or have up to $10,000 to drop down in order for that aged business credit to appear.
That's correct.
Okay. Thank
That's
you, sir.
correct.
Great,
No problem.
great
No
information.
problem.
Appreciate you.
No problem. No problem. So these are the different ways that people are building their business up and going to get funding. Don't y'all see a lot of people going to get funding these days because they're understanding more and more now how business credit and how the credit game works. Okay? How the credit game works. Let me end my call real quick. Just got everyone stay on the line. But I will see each and every one of you all at the top. I appreciate everyone staying for the training. And this training will be put into our Discord probably on tomorrow, so you guys can go back over it. Okay. So wings up to everyone. Wings up, wings up. And thank you for joining this training.